welcome. You're watching Countdown right here on Bloomberg Quint. It's a day where you've seen some amount of profit taking across the board, led lower mainly by the IT index amongst the large cap names. It's the last day of the week. If no more pain, we still might end the week in the positive territory. We'll talk about all of that and more in just a few moments, but let's quickly run you through the headlines. Markets are witnessing a weak day of trade today. The Nifty trades close to the 10,750 mark. Most sectoral indices trade with losses. TCS is among the top losers on the Nifty post its third quarter results. The stock is seeing fresh short positions with heavy volumes. Infosys may also follow TCS in terms of declining margins. The company will report its numbers post-market hours today. The stock is trading in the red. The six-member RBI panel on capital framework may recommend that the central bank transfer any surplus funds in tranches. That's Bloomberg exclusive. Good afternoon, Neeraj. The day has not been all that rewarding. In fact, we've seen a cut of almost 1% on the indices, not being able to hold on to 10,800.
Yeah, and that kind of brings the week to a slightly somber state as we close down. So 76 points off for the Nifty. The Nifty Bank 2, 0.5% lower, and the mid caps and the small caps, while they started off flattish in trade and they were very flat at the start of the trading day, are also having a slightly lackluster kind of a day. I wouldn't call this carnage, and nobody would really, but because just less than 0.5% for the broader end of the spectrum. But the market breadth is not too positive, nothing dramatic, not 4:1 or 5:1, but about 2:1 in favor of the declines. So there's some weakness out there too. I just bring up the global picture once very quickly and show what's happening to the world. The European industry should come up on your screen. Marginal greens out here. Dow, after the 0.5% up move yesterday, I presume would be flattish and is looking, at least from the looks of it, looks very flat right now, the Dow futures as well. So a bit of a lackluster day of trade across the world as we speak. Bring up our heat map and let's see if it's even Steven, or if the reds have some more edge. Yes, in fact, a lot of red on the screen. No dramatic cuts, but for TCS, I presume Tata Motors 3.5%. In the morning, the stock started off about 1% higher, so it's about a 4.5% cumulative intraday move on Tata Motors as we speak. But TCS is that big loser, has started off low and has stayed low, and it's dragged select other IT names along with it, though we don't see an HCL Tech in the top losers list right now. In the morning it was, which means that some of them have bounced back, but unfortunately TCS has not been able to. So TCS in the red, Reliance Industries about 1.5% in the red, M&M and Maruti in the red. So a clutch of names in the red. Frankly, just point out the couple of stocks in the green, the likes of ITC and maybe ONGC, BPCL, and just shows you how narrow the market breadth is in the session today. And which is why they went up, I believe, a 0.7% cut. But the state of mid caps, a clutch of names moving up as well as you normally would, but the breadth not too positive.
Well, breadth's also not too positive, and the indices themselves are trading under by about 0.5%. So in tow with what the benchmark indices are doing this time around. Take you through some of the movers then, thereabouts in the mid-cap and the small-cap space. You're starting off with IT, so you've got a drag in some of the mid-cap IT names as well. So the likes of a Hexaware is down 1.5%, Mindtree is given up 1.5%, and so is Mphasis, which is now sub 900, post its buyback price that it had an issuance of about 1,200 odd. Profit booking in real estate, so you've got the likes of an HDIL, Sobha, Godrej Properties. Mild downtick for Godrej Properties, but nonetheless around 729 is where it's trading at, though HDIL gives up a little bit more. The gains in HDIL were also quite pronounced over the week. Volume buzzers, ever ready. The stock trades 50 lakh shares and an increase of about 15%. Promoters looking to exit stakes, so you've got some activity happening around that counter. Praj Industries is one stock which over this week has consistently gained. I think one day where it had a flattish move, but barring that, it's been a big week for Praj. Stocks up about 12% in intraday trade, and KRBL as well on the back of news is up about 11%. Other movers in trade include the likes of Repco Home Finance, and this has been an outperformer in the housing finance space in the recent week, 3% higher right now. Linde India too gains ground, 5.8% higher. Adani Transmission has lost a little bit from the highs of the day, but it's still up in the green by about 1.5%. Volumes on this one also are supportive. But let's take a look at what's happening in the futures and options space. Agam Vakil joins in for that.
Well, selling has intensified right now, specifically in the last half an hour of trade, and your futures are clearly showing that, is reflecting that selling, which is intensifying. And well, we have about 0.5% gains in the open interest. This is against declines in open interest that we've seen earlier on. But at around 10,800, and we've actually seen the Nifty lose that mark. Well, the open interest in the Nifty Banking Index is a little higher at around 3.5%. This is where it's a little more deeper when it comes to gashes. But the volatility index, well, as long as it's not above the mark of 16, well, traders will be relatively relaxed, considering there isn't significant expansion in option premiums. And speaking of options, let's pull up your open interest change. And as one might expect, considering the Nifty is coming off to a certain extent, we are seeing more and more writing at the 11,000 call and the 10,900 call. So that is evident out there. This is your open interest distribution, and no prizes for guessing that the 11,000 mark becomes an even stronger resistance zone based on maximum open interest for calls. On the lower end, it remains with the 10,500 put, where you have max OI, and that is going to be your support. But when it comes to stocks, and some very interesting ones this time, we have ICICI Prudential, which is seeing a short covering in the January futures, considering a drop in open interest. Moving on to the next one, and we have Allahabad Bank. This is where we are seeing fresh shorts, down 3.6%, an open interest increase of around nearly 13%. So a lot of selling coming through, and the picture is not any different for Mindtree. In fact, a lot of weakness across a lot of these IT companies. So Mindtree as well seeing a lot of selling pressure. And the final stock that I want to consider is Repco Home Finance, which is actually seeing fresh buying coming through based on an increase of 7% in open interest. So mixed cues coming in, despite the fact the benchmarks, of course, currently reeling under pressure.
Right. Agam, thanks a lot for that. That's a quick update on the futures and options space. Moving forward, a different asset class considered to be a safer haven investment right now, and that's gold. MCX gold spot prices have surged to lifetime highs of 32,116 rupees per 10 grams. This follows Goldman Sachs' prediction of global gold prices to touch 5-year highs in 2019. Let's get an outlook on the domestic gold prices with Kishore Narne of Motilal Oswal Securities, who's joining us on the phone line right now. Kishore, what have you made of the current prices and these levels for gold, particularly domestic gold? We've been seeing the interest in global gold prices. Nonetheless, it's been considered a safer haven investment so far, so there's a lot of money that's been coming in there.
Yeah, good afternoon. I think, we've been suggesting to buy gold since last 8-9 months. We turned bullish on gold almost 8-9 months back. And the predominant background for that was that eventually Fed will be forced to slow down on their rate hikes, and the stimulus effects of the tax cuts will slow down, and the larger economy on the macro front on the US will slow down. So that's the primary reason which turns gold bullish, number one. Number two is that despite all the slowdown, the inflation, which has been predominantly on the lower side globally, will start to rise gradually. I think even the developed world inflation as well as the emerging world inflation is expected to creep up in the next 24 months or so. So I think both these factors, if we add that to the dollar weakness, I think that gives a good ammunition to for gold. And if at all the equity markets correct further, especially I'm not talking about the domestic market, but the global markets, including Dow or UK or Europe, then that adds fuel to the fire. So overall, I'm not saying gold will run away right now, but if you're looking at next 18 to 24 months, you should be looking at 30-35% incremental price move in gold. And so gold has been a laggard for the last 4 or 5 years, but I think that phase is behind us, and next 2 years is looking very exciting for gold prices.
Would you put a target to it in the medium term, short to medium term?
Yeah, if you're looking at 18 months, I think in global terms, it should be 1480 to 1540 in dollar terms. In domestic front, again, given that rupee will stay above 70, 72 kind of levels, because if the rupee appreciates, then that could be take off some of the gains in domestic prices. Because one of the significant factors for domestic gold prices is the rupee depreciation as well. So if we assume that the rupee will remain between 70 and 72, probably we are talking about 36,800 by the end of this year, that is 2019, and somewhere close to 40,000 plus in 2020.
Sure. Good afternoon. Usually, spoken about as a hedge against inflation in largely disinflationary times, at least from the looks of it in 2019. Why such a bullish stance on gold?
See, number one is that the global slowdown, whether it is triggered by the trade war or whether it is triggered by lack of demand, I think one we are seeing is demand side fading down in the macro front. Actually, that's one thing which we are noticing, especially in the commodity market. We are seeing non-ferrous metal side. That's where we are seeing the problem. If you see copper, nickel, zinc, all the non-ferrous are down more than 30-35% in the last 6 months itself. So there is a significant demand slowdown, which should be eventually turning. These are the early signals which are on the macro front. And number two is that the dollar index. I think dollar itself is not going to be that strong. I think these two factors are going to be significant. Second, if at all, if the U.S. have to give another stimulus, whether the number one is, of course, the monetary policy will not be reversed immediately. Probably they will halt it somewhere in mid-2019, and they will start talking more hawkish. Already Fed is started to turn dovish now. So once the Fed turns, the commentary turns more and more dovish, it becomes good for gold.
Right. Kishore, would you recommend that these levels be appropriate to go and buy right now? If someone is looking to buy physical gold?
Yeah, actually, gold is not a level driven. Again, it's like an index investing, right? When you don't look at normally levels, you can actually periodically allocate a certain percentage of your investable surplus into a particular asset, because it's as difficult of timing a Nifty or a timing of gold is as difficult as the same. So, of course, you can buy periodically like an SIP or kind of thing, or because there are various methods nowadays. There is a digital gold, there are ETFs, there are derivatives. So it's not only physical gold nowadays. So there are various mediums which you can invest through. So periodically allocating some more, and as we go ahead, I think the incremental allocation, normally 10 to 15% is the normal suggestion of gold being the part of the portfolio. But I think my suggestion is, if you're going into 2019-20, that can go up to 20-25% rather than being at 15%. So your slightly higher allocation towards gold would help in the next couple of years.
Okay, Kishore, just one final question. Gold doing well, does it lead to other metals like silver, for example, and to do well too? Is there a correlation, or what are you telling your clients to do with regards to maybe silver?
See, we are not bullish on silver right now, and of course, as you said, they are like distant cousins, which they have to move together, and historically they have been moving together. But I think if you look at last 5-6 years, silver has been laggard within the bullion segment itself. So gold continue to outperform. And I believe in the next 18 months, especially the first 6 months of the next year or so, this 2019, gold will still be a significant outperformer. Silver will play a catch-up game maybe towards the end of this rally. So silver has this notorious character of high volatility. It moves very fast. But right now, silver is being pressurized by the weakness in non-ferrous metals, especially copper. So it normally piggybanks on the gold towards the end of the rally, as the people who start to believe that the gold trend is going up, and then the lower segment of the people normally go and buy silver at that point of time. So I think initially gold will continue to perform well and silver will be a laggard. Maybe if you're going to the end of 2019, so then silver will play a catch-up game.
Okay, got that. Thanks very much, Kishore. Really appreciate you taking the time out and sharing your thoughts with us.
Thank you.
That's a quick conversation and a quick opinion coming in on gold prices touching those record highs, domestic gold prices. Moving on then, the expert committee set up to review RBI's economic capital framework is considering a phased transfer of the central bank's surplus reserves to the government. Sources tell Bloomberg that members are now discussing just how much of the excess can be transferred. Rishti Beniwal reports.
The Economic Capital Framework Committee set up by RBI is discussing how much excess reserves does the RBI have, how much can be transferred to the government, and in which manner can it transfer those reserves. In its first meeting held on Tuesday, it discussed all these issues, and one of the issues that has emerged is these transfers can be transferred in tranches over a period of 2 to 3 years rather than giving it in one go. This way the issue won't be politicized so much. This is according to the people who are familiar with discussions in the panel. The panel is going to have another meeting later this month to firm up its views on this issue. It might have few more meetings before the deadline of first week of April for submission of the report. Indications are the panel might submit the report earlier than the deadline because the government needs money, and a surplus transfer from RBI can help it. Okay.
Well, let's shift focus now and look at a particular space, fertilizers. ICRA expects stable year for urea players, while it expects a slightly tougher year for P&K players. A rise in raw material prices and a weak rupee is likely to put pressure on the phosphatic and potassic segment. Let's discuss this report in detail with K. Ravichandran, the Group Head of Corporate Ratings at ICRA. Thanks so much, Mr. Ravichandran, for joining in. What's the larger outlook for the space at large? I know you would have specific pockets and views on all of those, but what's the larger outlook for the space?
Yeah, good afternoon to all the viewers. Our outlook is stable for the urea players, largely on account of the fact that it is a regulated market, and while the returns per se may not be very attractive at this junction because of various under-recoveries, but since largely the returns flow from the regulated parameters, there is stable outlook for the players. Whereas in the case of phosphatic and potassic fertilizers, the returns are subject to market forces. In the recent past, because of the sharp depreciation of the rupee versus the US dollar, and the fact that the industry has a very high import dependence, and also the fact that raw material prices, importantly phosphoric acid and ammonia prices have shot up substantially, the margins have been under pressure for the players. Moreover, there has been drought in, or major deficiency in rainfall in some of the states like North Karnataka, Maharashtra, and Gujarat. The players have not been in a position to pass on the hike to the farmers. As a result, the margins of the P&K players have been affected, because of which we believe that the margins will be compressed over the next 3 to 6 months time frame.
Okay. So the demand, and you're saying that it may grow between 2 to 3% and cost of production may remain elevated. That doesn't sound like it'll be a good scenario for the space at large. Will this be a gradual impact seen, or do you reckon that this is something that we'll see for the better part of the year?
For the better part of the year, it should be in that range only. But within that, if you look at the various grade of fertilizers, the DAP growth has been negative at about negative or stagnant in the recent past. Whereas in the case of NPK and SSP, growth has been very good, almost in double digits. That is because the farmers are down trading to lower price fertilizers. DAP is an expensive fertilizer compared to NPK and SSP. Whereas in the case of urea, the demand has been more or less stagnant in the last 3-4 years. So as a result, net, if you see, the overall growth for the fertilizers should be only about 2 to 3%. But within that, efficient players, should be able to report relatively better profitability. If you talk about urea players, there are companies who produce urea at, globally competitive energy norms. Companies who are able to produce urea at, let's say, 5 to 5.5 million kilocalories per ton of urea, they are able to report energy savings compared to other, high-cost players. To the extent their profitability is bumped up because, certain part of the production, the players get import parity linked, pricing. To that extent, efficient players like Chambal, some of the units of IFCO, etc. They're able to report relatively better profitability. Even in the case of P&K fertilizers, companies who are backward integrated to produce phosphoric acid from rock phosphate, they have relatively better margin compared to players who are entirely dependent on imported phosphoric acid. So the impact is different for different set of players. So while the efficient players with good cost structure and backward integration should be able to report somewhat better profitability, the outlook is not that conducive for the other set of players.
Without getting into what each of these, without getting a stock discussion, which of the company's financials that you would have looked at appear to be the stronger ones and better able to withstand either the input cost rise or a lower than estimated uptick in prices?
We have to look at again, the players separately. There are companies who are into chemicals as well. Among the lot, I would think, integrated fertilizer chemical companies, they are well placed to, weather the challenges in the fertilizer sector. While fertilizer sector per se may not be turning in, good profitability, chemicals has been, major, driver of their profitability. If you talk about companies like GNFC or GSFC or, for that matter, Deepak Fertilizers, etc., they have integrated complexes wherein chemicals account for almost 80 to 90% of the, overall EBITDA. The outlook for some of the products like, toluene diisocyanate, aniline, or for that matter, caprolactam, ammonium nitrate, etc., has been very good. Demand has been growing at a rapid pace. And the spread between products and raw material prices, has been very comfortable, because of which, they've been able to do well. Next set of players would be, the urea-centric players, wherein whose energy consumption is, well below the preset norms of the government. So here, we have to, see, players like, IFCO, or for that matter, companies like National Fertilizers or CF, etc. They're well placed to weather the storm. In the case of P&K, as I mentioned earlier, companies who are backward integrated to produce phosphoric acid, for example, Coromandel, they're all well placed, with regard to protecting their profitability even in a stressed year.
Okay, Mr. Ravichandran, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time.
It's my pleasure. Thank you.
Well, that's the view from ICRA, and they believe that the performance of fertilizer companies improved in the first half of FY19, and P&K players may see a tough year because of the rising input costs, and which may weigh in, but they believe that selectively companies might be able to withstand and witness stable growth in this Rabi season, while even though sales in Maharashtra are likely to remain weak. So that's the view on the fertilizer space. Okay. A couple of stocks in focus now. The first one is Eveready Industries. The stock has gained the most in 3 years after reports suggest that the promoters are planning to sell the flagship company. Or what could be the potential factors behind this move? Nikki Mirchandani is here with an analysis. Nikki, good afternoon.
Hi Neeraj. So the Times of India in the morning reported that the company's promoter BM Khaitan-led William Meager is likely to sell stake in the company. Promoter holding in Eveready Industry currently stand at around 45%, and the stake sale, according to the reports, could attract in foreign as well as private equity fund buyout. Just to give you a shareholding pattern of how this would work out, it's a promoter shareholding at 45% and the remaining at public. It also said, the report suggested that the company, the promoters, are looking to sell around 30% of the stake and retain around that 10 to 15% stake. So we've calculated at the current market price of around 210 per share. How much does this percolate down to? It's almost at 687 crore that the promoters could raise if it sells out around 45% stake. However, if it manages to retain the 10-15% stake as suggested in the report, this would make for a price of around 450 odd crore. The reasons that we digged into the financials to understand why promoters potentially could be selling this company's stake, well, the first thing was obviously the leverage ratio out here. If you look at that number, that's 2.6 times as per the first half of the financial year 2019, which has been compared to the financial number of FY17 and FY18. Obviously, a figure more than 2.5 times, definitely it doesn't look too comfortable position right now for the company. The second point, which also sends some kind of alarm bells, is the company has not made any kind of provisioning for the kind of penalty which has been levied by CCI back in April 2018, when the company was levied up, was charged for an alleged cart Cargill to control and distribute pricing of zinc-lead batteries. To an extent, a fine of around 172 crore was levied on the company. No provisions so far have been made by the company, despite a 10% being deposited by the company so far related to the case. And also any delay in the ability to sell the surplus plant that the company is now looking forward to in order to deleverage the financial position of the company. This would be done by selling two of its land sale assets, which is to the tune of around 225 crore. So any delay in which would further accentuate or further stretch the balance sheet position. Apart from that, also we're looking at a very stagnant kind of EBITDA margins. If you look at the picture that we're looking at, FY18 numbers have seen some kind of recovery coming in, but then overall on FY18 the numbers pretty much remain around that 9 to 10% kind of level. That's mainly on account of the slower growth that we're witnessing right now in the core division business, and also not so yielding results of the diversified business that the company is currently witnessing at.
All right, Nikki, thanks very much for that. That's an in-depth analysis on Everready. The stock in focus, it's up in double digits, 13% higher, 15% now for the counter. 209 is where it's trading. And Karnataka Bank numbers on your screens, just to quickly highlight them for you. So the net interest income is moved up 8%, it's coming at 488 crores. Versus 451 crores. Net profits too have surged significantly, 62% higher this time around at 141 crores from 82 crores. You've got a reduction in gross NPA from 4.66% quarter on quarter to 4.45 quarter on quarter, while the net NPA remains unchanged at 3%. Provisions at 209 crores versus 193 crores, which is an increment of about 8% on a quarter-on-quarter basis. The stock not doing a whole lot much, saw an initial uptick, but has cooled off from there now. Flat for trade, 114 on Karnataka Bank.
Okay, Praj Industries is the stock in focus. It's gained over 40% in the last 4 days. And let's just put the spotlight on that. Firstly, the 10-day chart will come up on your screen, and as you can see, 31st of December, from the levels that it was trading at, it's only done very well. The point being, the last few days, the gains have been accelerated, and total gains of about 46.89 or 47% in the last 7 trading sessions. Now, it's been once this whole ethanol movement started, it was the usual suspect. Everybody expected it to gain because it will get the orders for machinery from the sugar companies and the other manufacturers of ethanol, and that has happened too, because in an earlier interaction, Praj to Bloomberg Quinn mentioned this as well, that orders are coming in thick and fast. But the point is the way the stock has been moving up, and if just get the graphics dashboard on the screen and you will see what I'm talking about. Firstly, the average volumes in today's session substantially higher than the 20-day average volumes, and those two, by the way, in the last 3 or 4 sessions have been inching up. So on slightly higher volumes on an average for the last 20 days, today's volumes substantially higher. This is of course the volume picture, and expected to be much higher than what the 20-day average volumes are. Let's go back to the GD or the graphic dashboard, and you will see a couple of things. Firstly, the price target notwithstanding, there are hardly any sells. In fact, 0 sells, 5 buys and 3 holds. It's not an institutionally covered stock as much as it's institutionally owned. A lot of PMS managers own Praj Industries. A lot of smart money owns Praj Industries as well. In fact, we do have some of the owners out here. This is of course the promoters, Pramod Chaudhary, etc. But HDFC Asset Management Company holds some stake. Tata Capital Financial, Sundaram Asset Management, LIC, and then a couple of other Dimensional Fund Advisors as well hold Praj Industries. So well owned institutionally, not as well covered institutionally, but a stock that is getting into the thick of business simply because the order book substantially higher. If I can just go back to the GD once again and just point out that while the target price is at 123 or 124, the consensus target price is way lower, and therefore the return potential isn't the highest. Once these quarterly numbers come out, and if they manage to deliver what the street expects them to deliver, or what the smart money expects them to deliver, then those target prices also might move higher. Substantially higher in great momentum. The question mark only remains, Devina, that at some point of time people will start questioning the valuations, because it's a company that's promised a lot over the last few years and hasn't quite delivered. Can it do it this time around will be the big question mark.
Well, we've been seeing the sentiment change a lot for this particular counter. Not so much so, actually, the movement on sugar stocks versus Praj. So it's probably having a field day of its own, and a field week, rather, of its own. So that's about Praj Industries. We'll get in our market guests in just a few moments, but I just want to quickly run through some other stocks and the moves thereof within the Nifty 50 as well as the mid-cap space. So I'll start off with the mid-cap space, and aside from Praj, what's gaining ground heavily is KRBL. That stock's up about 11%. HFCL has moved up 15%. So in the last 7 days, that takes HFCL is 5% today. In the last 7 days, is up 15.5%. Then you've got the like of an AstraZeneca, which is at 1626. Last 7 days move of 14.5%. Fertilizer stocks, we just got some commentary coming in from ICRA. Fertilizer stocks this week had a lot of interest. Chamal Fertilizers gained by 9% this week. You've got stocks like an Aferso Solution, OMDC. Jet Airways today makes a comeback, so 247 on that stock, while Interglobe Aviation doesn't do a whole lot much. Amongst the losers, it's real estate that's looking like there's some profit-taking. Infrastructure and real estate as a pocket. So HCC, HDIL, Shrey Infra, Shobha Developers, these are kind of losses that you're seeing coming about in some of these names. Just Dial is down 2.5% as well. Brijesh Singh of Stock Access is joining us on the show right now. Brijesh, good afternoon to you. What would your call be on the index right now?
Good afternoon, Devina. See, no doubt the Nifty making a recent high, and after that now it's been making a symmetrical triangle formation, but that symmetrical formation on the downside has been broken. So I am being bearish right now. The pattern which has been formed, followed by the oscillator on the shorter term time frame of the chart, they are making the lower highs, which is giving a negativity, the momentum to continue on the higher side. So taking the Nifty spot value, if anyhow Nifty spot value, if we are able to see a rise of 10,780 to 10,790, one can go as a sell side with the stop loss of 10,880 and look for the target of 10,640. The time frame to hold this would be say 5 to 7 trading session as such.
Okay. What about specific pockets of strength and weakness? Brijesh, let's come to you for your stock ideas first.
Good afternoon. Yes, there are two calls. Tata Motor DVR. It's been looking weak. It's after making a recent swing high, and after that it's not able to cross 100 marks, and after that it came down, and right now it's been trading somewhere in the 95 to 96 zone. So one can use for a sell side with the stop loss of 97.5 and play for the target of 91 to 92 rupees. The time frame to hold this call would be say another 3 to 4 trading session. And Apollo Hospital, on a shorter term time frame of the chart, the stock is making the higher highs with the higher lows formation, which is giving a bullish sign. Even in the weekly time frame of the chart, the bullish wolf wave pattern has been formed, so it's been moving towards that target. So right now somewhere around 1290, if we are able to get it, or nearby that, one can look out to buy this counter with the stop loss of 1270, play for the target of 1320 to 1325 zone. The time frame to hold this counter would be a 2 to 3 trading session as such.
Okay. Let's bring in Rahul Randeria as well. He's an independent market expert who's joining us on the show right now. Rahul, what would your call be on the index? Would there be a trade in the bank Nifty also if you're tracking it?
Yeah, good afternoon. If you look at the last 2 days, the candle on the daily charts, it has formed it was a doji formation, and we have recommended a sell in Bank Nifty at the levels of 27,740, and our target was just nearing to 27,300. So definitely today's low just came near to 27,382 spot levels. So looking at the weekly candle, it seems to be a little weak. So any pullback from current level levels, maybe 30-40 points or 100 points, should be used as a selling opportunity on the upside. And downside, I feel that Bank Nifty can test the levels of 27,200 or 27,100 on the downside on a positional basis, because just an hour is left for the trade. So one should wait for some pullback and then go short at the higher levels. If you look at Nifty, again on the weekly candle, Nifty has formed an inside day formation. So definitely it is an indecisive move, but we have seen a selling pressure at the higher levels. So maybe 30-40 points pullback from current levels should be used to go short at the higher levels. I feel that downside Nifty can test the levels of 10,680, and one should place a stop loss above just about 10,850 odd levels. So one should wait for some pullback on both the indices and go short. But overall, the larger degree trend remains intact, means bullish. So I would wait for some pullback on the downside and then go long. But as of now, one should sell on rallies.
Okay. And what about your stock ideas?
Yeah, definitely. There are a couple of stocks which are looking good. The metal stocks seems to be into oversold territory. It is not an intraday call, but definitely from current levels, if anybody wants to take a swing call, can buy Hindalco from the current levels with a stop loss below 200. Positionally, I feel that a stop has potential to test the target of 220. So definitely Hindalco is looking good from current levels.
Okay. Before we get in our fundamental expert on the show, let's find out about a few stocks that are buzzing in trade. Sharad Dubey joins us as usual with a small list. Sharad, good afternoon.
Good afternoon, Neeraj. The first stock I've picked up is Caplin Point Laboratories, which is up by almost 9%, its highest levels since in a month. So basically, the board has approved the sale of its injectable business undertaking and its 2 research and development units to its arm Caplin Steriles. This transaction will happen via slump sale on a going concern basis. The second stock I picked up is Shakti Pumps, which is down by almost 2%, its lowest level since in its past 4 trading session, after the company announced that it has closed its operations for 2 days from January 9 to 10th. This is due to a dispute between labor contractor and the workers. The contractor says that the contract with the company has actually closed. Apart from this, the third stock I picked up is Interglobe Aviation, which is down by almost 3%, its lowest since December 17, on crude oil rising around 19% in the past 11 trading sessions. And recently, the Aviation Ministry has put forth stringent norms for the Airbus 380neo Pratt & Whitney engine operators. So these are the 3 stocks buzzing today.
All right, Sharad, thanks very much for that. And on the topic of Interglobe Aviations, this is the 8th straight day of losses coming in for the counter. It's been beaten down quite a whole lot this week. 1,058 is where it's trading at, down another 3.5 points, percentage today. Bringing in Lancelot D'Cunha of ValueX, he's joining us on the show right now. Lancelot, how have you placed yourself in a market environment like this?
Well, at the moment, I'm staying out of the market as far as buying is concerned, waiting for some good opportunities. I do believe that, we've been seeing the beginning of the results, and they are looking to be a little bit weak. So that should probably give some rise to a correction in the market, and that could help in terms of giving us an opportunity to buy into some companies at lower levels.
But what is on your list? If you get the right time to enter, then you have those on your mind that you will enter into.
So I would be, I am positive on the banking space. The private sector banking space is one area which I am fairly bullish on. The other space is the NBFC space, but one has to be a little bit selective on the NBFC space, because there could be problems coming up with liquidity that could impact the profitability of some of the NBFCs. But you have also the good quality NBFCs whose valuations have come off quite a bit, so that would be an opportunity to buy. And I do think even the mid-cap IT space will throw up some interesting opportunities, because we have seen valuations come off quite a bit from the mid-cap IT space. So that sector also should throw up some good opportunities to make investments if there is a further correction on the downside.
What did you make of the IndusInd Bank numbers and the commentary thereof? I think a lot of people were disappointed with the quantum of clarity given on a number of issues, including IL&FS. The stock has corrected 8.5% since the delivery of those numbers over the last 4 days.
Right. I think, IndusInd couldn't probably make further provisions at this point on IL&FS. And the lack of clarity from IndusInd Bank on the provisions being made at this point in time did suggest that there could be more pain and that could lead to a further write down. But what was a little bit also discomforting was that there were other NPAs that have also risen. So that could give rise to a sense that maybe in the next quarter we could see an increase in NPAs other than IL&FS, and things may not be as robust as anticipated on the other loan book. So over the last couple of years, IndusInd Bank had been increasing their exposure to the automobile, the auto financing segment. So if you're beginning to see some NPAs come up on that front, then the size of the book being large, we could see a bit more NPAs coming forward. So that's a little bit of a concern. But if there's a further correction, again they are well diversified across various classes of assets for loans, and they've recently started even the gold loans, loan against gold. So I think if you look at the book, it's fairly well diversified. So risk of concentration of a particular sector really impacting the NPAs in a major way is very, very minimal. So I would say that this is a good quality bank, and one can look at if there's maybe another 10% correction, definitely an opportunity to buy.
Okay. The other one that I wanted to talk about is Interglobe Aviation. And maybe aviation as a pack is under a problem, but for Jet Airways, which of course today, on that news that came out on Bloomberg yesterday, has gained a little bit in the morning. But Interglobe Aviation falling for the 8th straight day. SpiceJet not really doing anything dramatic, and Jet2 has got its problems of its own. I mean, from 281 to 240, 245 has come off, but for those deal talks. What do you do here?
Well, I've always believed that aviation as a space there is a period of shortage of capacity which drives fares up, and during that period the airlines make a lot of money. Over the last 24 months we've seen huge capacity being built in, whether it is Jet Airways adding on aircraft, or it is SpiceJet or Indigo. They've brought in large capacities, and that has driven the fares down. And given the rise in crude prices and the margins getting narrower and narrower, I think they've reached a stage where they all have to tighten their belts and really cut capacity if they need to stay profitable. So now they can no longer enjoy the same price earning multiple that they were getting when they were generating profits and when capacity was under a constraint. So I think there's a structural change in the entire business model that is going to play out maybe over the next 12 to 24 months. And during that period, you're going to see weaker airlines struggle, which we've seen in the case of Jet, because they were significantly over leveraged, and maybe the stronger airlines would then emerge stronger, but not before they also go through a pain themselves. So I would say that it's similar to what happened in, let's say, the telecom space, where you saw capacities built up and then margins, prices going down, then margins being under pressure, and then after that maybe just consolidation and one or two big players dominating the space. We're going to see a similar consolidation happen in the aviation space as well, but not before there's more pain.
So good to buy Interglobe Aviation or no? Dominance is one thing, whether it's a good stock or no is the other thing.
No, I don't think one should, at least personally, I don't feel that we should stay invested in aviation, because it's very difficult for aviation companies to make money consistently over a longer period of time.
Staying invested is one thing. Rahul, what about trading then?
Definitely, if you look at specifically the airline stock, these stocks are particularly having inverse relation with the crude. Whenever crude rises, the stock goes down, and whenever the crude corrects, the airline stock goes up. So recently, what we have seen that already the crude had shooted from the significant low levels in a very short span of time. So definitely that is impacting the aviation stock. But I feel once starts cool off at current levels, maybe again some sort of retracement could be seen in crude. So definitely maybe another 5 to 7% downside could be seen in the aviation stock, and that should be the area where one can go long at the lower levels. But definitely I would rather look out for buying at the lower levels and wait for some more correction from these levels.
Okay. We were discussing Praj just a moment ago. Brajesh, you want to comment quickly on a Praj and also a Groove Finance?
See, Devina, Praj, no doubt, from morning it has moved up from and made a high of 161, and right now even the volume breakout has been seen. Right now the stock has been quoting at 154. If stock holds on the level of 147, then the short-term momentum would be continuing on a higher side, and the next resistance to watch would be somewhere around 167 to 170 zone. If 147 breaks, then the important level on a downside would be in a band of 136 to 140 zone. That should hold on, but still the target would be somewhere around 160 to 170 zone, where the resistance lies. And for a short term to the medium term is been concerned. Regarding with the Guru Finance is been concerned, the stock after making a recent swing low of somewhere around 228, we have seen a bounce back. Still, it's not been favoring the on a buy side nor on the sell side, but some die-hearted wants to play on a buy side, then I'll suggest keep a strict stop loss of 235 and look out to buy this counter for the small target of 252 to 255 zone.
Okay. So those are some interesting names to watch out for in the session today. Lancelot, any thoughts on the sugar and sugar-related entities? You know, Praj is in focus because I believe their order books would be sky high. Sugar companies are getting a lot of positive cues, including higher MSP, some soft loans, etc. Some ethanol manufacturers, which a lot of people haven't even heard before, the likes of BCL Industries, etc., are in the limelight. Any thoughts here?
Well, you know, the problem with the sugar industry is that a lot of its profitability is dependent on the actions that the government takes. You know, like the MSP and various export related, whether they'll allow exports, not allow imports. So, you know, I think it's very difficult to be an investor into this kind of a business unless one is commodity savvy and tracking, you know, the cycles as to what's really going to happen. And it's all, again, it fluctuates from season to season. So I personally have been staying away from this segment because it's, you know, it's extremely tough to be able to call it right. And, you know, government intervention can change valuations with their actions. So it's maybe from my perspective, I always probably stayed away from this kind of sugar as an investment opportunity. But yes, the industry is undergoing changes and we are seeing a positive flow. But I do not really have a track of what each companies are valued at this point in time.
Fair point. A question on whether you believe Tata Motors at 180 with all the cost control measures that they are trying to take at the JLR front is a good bet, or whether you view this as a sign of a slowing global economy and therefore maybe lower sales, and therefore why pay a premium to the global car companies to a Tata Motors which is almost a pseudo JLR?
Sure. Well, I look at it also in a similar fashion. I think Tata Motors is pseudo JLR per se because almost 80% of its profits come from JLR. And while we have seen a plan being put into action to improve the domestic operations, and we've seen on the passenger car segment, the domestic sales have improved. And we are seeing, you know, even on the commercial vehicle segment, there was some improvement which has probably tapered off a bit in the last month or so. But long term, yes, I think that area should also strengthen. But when you look at JLR, I think the issues that are faced, that JLR is facing globally, which are very difficult for Tata Motors to address. One is the China issue and the other is what's going to happen if there's a hard Brexit. So the impact of these two haven't yet been fully absorbed in the price. So while in a normal situation, I think Tata Motors looks an attractive opportunity because we do not know what's going to be the financial impact of Brexit as well as what's happening in China. I would maybe put some money to work at this point in time and wait for a negative reaction, because if you look at a longer term outlook, I think Tata Motors is a company that is going to transform technology from JLR into its products that are manufactured domestically. So that should help the domestic business. And it is globally also a world-class player in the automobile space. With a bit of cost management, you know, I think they should be able to compete with the Germans and the the Toyotas over a period of time. So compared to the valuations that those companies are trading, yes, it does look relatively attractive. But if one is keeping that as an outlook, there's an opportunity to probably buy it lower in case of a negative event.
Very ambitious stretch of imagination at this point for Tata Motors, though. It's just about started to recover after the recent downfall that it's had because of the decline in the numbers for JLR across China as well. Within keeping up with the same space, would you believe that Eicher Motors at 20 times is still expensive, though it's come off?
No, I wouldn't say it's expensive, because I still feel that particular segment of the market, which is a 350 to 650 cc segment, there is still significant demand, and it is a large segment, and we will continue to see growth happen. While there is increased competition from other players in the same segment because of the Mahindra, the Java coming in, I think we will continue to see some growth coming in, because you are also going to see exports picking up for from the new models that are being launched. They are global models, so I would expect that this is a good level to start investing in Eicher Motors, even though it's 20 times. Yes, we have seen some negative news on the domestic sales in the last maybe quarter, but I would like to see how that plays out over the next 6 to 8 months, and definitely look at holding on to this stock for a little longer play from here.
Okay. Let's get in the chart of the day segment going. Small cap valuations took a beating in 2018, and while investors seem to be treating the broader markets with some amount of skepticism, brokerage houses have listed out 5 small caps which have 100% buy calls right now. Yash Upadhyay fills us in with those details. Yash.
Afternoon, Neeraj. The small caps faced the worst drought in 7 years in 2018 as higher crude oil prices, weaker rupee, trade tensions and liquidity crisis in the NBFCs dragged the BSE small cap index lower by almost 23%. However, there are a select few stocks that brokerages are the most bullish on in 2019. Not only do they have a 100% buy rating, the stocks offer an upside of more than 20% from the current prices, according to the analyst estimates tracked by Bloomberg. Amongst the top is Redington India, where analysts expect an upside of more than 50%. PNC Infratech and Ashoka Buildcon from the infra space are the other 2 names, along with Music Broadcast and KEI Industries, wrapping up the list of the top 5 names. As far as the reasons are concerned, why the analysts continue to remain bullish on these names, well, let's take a look at why analysts are positive for Redington. They see the strong growth momentum and in the overseas business, as well as recovery in the domestic operations to work well for the company going forward. As far as PNC Infratech is concerned, well, the strong and a healthy order book, along with strong execution and scaling up of its city gas distribution business, that is what they are positive for when it comes to Ashoka Buildcon. As far as PNC Infratech is concerned, a strong operational profitability, along with a healthy order book and financial closure of its hybrid annuity model projects, that is working well for it. Music Broadcast, a strong second half of FY19, aided by a delayed festive season and an increase in government spending in the election year, is expected to do well for them. And for KEI Industries, again, a robust order book, strong growth in retail sales and an increase in FY19 guidance for its key power business is what analysts are watching out for.
All right, Yash, thanks very much for that. That's our chart of the day segment. Brijesh, a quick query that's coming in on from one of our viewers, wants to know what to do with Reliance Industries at this point, hovering around 1100 odd. Is this a stock that you would buy afresh, or if you have it, hold on to it?
Hey, Devina, it's been trading in a range of 1070 or 1075 on a downside, followed by 1125 to 1130 on the higher side. And if I broaden the range, then it's 990 or say 1000 on a downside, followed by 1185 to 1200 on the higher side. So if someone has a view of a very short term, then keep a stop loss of 1075. But at this present rate, I would not be buying it. Let it come to the level of 1090 or below, then your risk reward ratio would be in your favor, with keeping a stop loss of 1070 or 1075 and play for the target of 1120 to 1125. 25. If someone has a view of, say, investment point of view, somewhere around, say, 9 month to a 12 month, then keep a stop loss of 990 or below that, and look out to buy this counter at somewhere around 1050 or below that, and look for the target of 1250 to 1300 in a 1 year plus time frame has been concerned.
Okay, got that. Should pull up an Infosys actually. It looks like the stock has recovered a bit from the lows of the day. Infosys, that's emphasis. Stock's down 1%. Infosys has started to make its move up, and in fact now in the green, so was down closer to 1% and has gained ground and now is up a third of 1%. So you're seeing that move of about 1% in the last 15 odd minutes of trade. Lansot, anything that you would like to talk about and that you are putting your money in right now?
Well, like I said, at the moment I'm not really investing, but I think if you look at opportunities like even Infosys, it has now changed from a growth stock to a stock that's going to give you good cash flows by way of buybacks and dividend options, etc. So you can invest in Infosys at maybe these levels or even a little bit below these levels to get a 10 to 12% per annum return with relative safety, because every time the stock goes down, they'll probably come back with a buyback in order to reward shareholders. And every year they're generating so much of cash, unless they're able to deploy it, effectively, it'll come back as a buyback or dividend payout. So in that sense, the Infosys as an opportunity can give you a 12% return, irrespective of how the market's really playing out. So such type of opportunities are also available in the marketplace.
Okay, Lansot, we'll leave it at that. Thanks very much for joining us. Appreciate your time. Lansot D'Cunha there with his market views. Well, a correction, if seeped to the election season, may pose a good buying opportunity. That's the word coming in from Mahesh Patil of Aditya Birla Sun Life AMC in a chat with Yash Upadhyay. He also speaks about the factors impacting the equity markets and the outlook for the year 2019. Here is a small slice of that conversation.
There are positives and negatives. Okay, so on the global front, if you look at it, clearly I think global growth is kind of slowing down, which is not necessarily bad from an India perspective, because we're not expecting a global recession. A mild slowdown in global growth would mean that the rate hikes, okay, which US you were expecting, would not be to that extent, and commodities would remain fairly subdued, like oil prices, for example, which is good from India macro stability perspective, and we're seeing that external stability coming back. Current account deficit, which had gone up to around 3%, is expected to be around 2% or so, with oil at around range of around 60 to 70 in that band. And overall earnings recovery, which has been lagging behind, I think we've seen that playing out in this calendar year. The banking and financial services sector, which went through a lot of pain, especially the corporate banks, are seeing a recovery. So on the back of fairly strong earnings growth in FY20, we should see the market slowly starting to track earnings growth. Mind you, the global liquidity will not be as strong as what it was earlier, because a lot of the QE which was there is getting unwound. So the liquidity won't be as strong, but I think the growth outlook for India relative to the other developed markets will look fairly strong, and that should help for money flow. Even the narrative on the emerging markets is improving. So the emerging markets went through kind of a correction in the last 2 years, as US and other developed markets did well. So slowly we are seeing that the growth differential in emerging markets starting to improve, and the capital outflows what we saw last year, I think that from emerging market, I think that should reverse. So on that backdrop, the liquidity and money flow into India should be better than what it was in the last calendar year. So I think with the micro earnings improving, macro stability coming in, and liquidity at the margin improving, I think we should do fairly well in this calendar year. Though I think the return expectation should be fairly moderate, because we could see some PE contraction could happen, but earnings growth will be stronger. So I think if earnings growth expectation is around say 15% or so, market can give returns in the low teens. Obviously there will be volatility, elections and other events will be there, and I think market would want to sense. But I think elections, we believe that should not really matter for, I think we've seen post-election 6 months down the line, markets tend to again revert back depending on the underlying fundamentals. And that should, I think, play out even this time also.
Autos as a space hasn't done really very well over the last couple of months. We've had lackluster festive sales with heavy inventory build-up at the dealership level. How are you reading into this?
So it has been a bit surprising because at the beginning of the year, we were seeing a pickup in consumption and discretionary consumption play out. I think the rural distress, the rural demand was not as strong as one was expecting. Also, I think the couple of things happened. One was the increase in the prices because of the new insurance norms, where you had to take an upfront insurance for 3 years and 5 years for two-wheeler and four-wheelers. And oil prices, which went up, which would have impacted the demand growth. And also, other important was the tight liquidity situation which was there, which affected the some amount of credit availability from the NBFC side, because NBFCs have been a large financer for credit, to the auto space, more so on the two-wheeler side.
Right.
So that would have also impacted the demand. I think all these things are now kind of easing off. So liquidity is coming back into the system. For NBFC, it will take another March quarter, where things would really ease off on the liquidity front, and we'll see them coming back into the system. Again, on oil prices have moderated down, so for fuel, it takes time for it to get reflected into the retail pump prices, which we are seeing them coming off now. So that should help over there. And overall, I think the consumption government is rural economy. I think there is a big push given to rural economy in terms of to drive consumption over there. So I think in this pre-election, I think you'll see a lot of spend happening over there, which should be good for consumption. And we expect the demand should start to come back, say another a couple of quarters down the line. And I think India auto demand should track somewhere close to around high single-digit kind of a growth. And inventory correction also is happening. So a lot of inventory build-up happened in the system. Companies are taking production cuts and to correct that. So I think you should see that effect kind of getting waning out in the next 3 months or so.
Mahesh, markets seem to be factoring a Modi coalition government at the center. Should that not come into effect, or say the base case scenario does not translate, what sort of an impact do you see it have on the markets?
So very difficult to talk about how the political outcomes would be an impact, but at least our past analysis have shown that there is little correlation between election outcome and the market return, at least from a 6 months perspective post-elections. I think near term there could be some volatility, but I think the good news is, I mean, this time around, I think a lot of the big policy initiatives have already been done, right? So I think you'll see a continuation of that, irrespective of whichever government comes into place. And overall, on the macro stability and the economy, we are in a fairly decent position. So I don't think that any political outcome should jeopardize or impact the overall economic outlook or earnings growth trajectory. Some sentiment impact could lead to short-term volatility, but I think that would quickly go away as things normalize. So if at all there is a correction, I think it should be looked at a good buying opportunity in the context of where we are at this point in time.
Delegates of over 100 countries, 15 partner countries, 10 partner business organizations are uniting on a global stage. They will also witness the India's biggest trade show, new opportunities for trade between Gujarat and Africa, Ahmedabad Shopping Festival, MSME Seminar, Futuristic Technology Exhibition. Watch the unfolding of Gujarat's future in Sprint 2022 and experience much more. Welcome to the 9th Vibrant Gujarat Global Summit, 18th to 20th January, Gandhinagar.
What started out as a quest for good coffee has turned into a single estate specialty roast coffee connoisseur's paradise.
It was purely, this is something that we want. We're looking for good quality coffee.
Theirs is a story of starting something amazing and new and refreshing.
It wasn't just Matt and me who were taking this journey to change the coffee landscape in India, but it was actually going to start from the farms.
The face of coffee in India has seen a sea change in the last few years. And it's owed now in a small way to Matt and Namrata, the founders of Blue Tokai Coffee Roasters. Watch their exceptional story only on Bloomberg Quint.
Welcome back. You're still here with us on Countdown. 25 minutes left to go for market closing. We're wrapping up the day as well as the week. So we gained actually quite a considerable amount of lost ground and back above 10,800 for the indices. Starting the day and quickly checking on Europe as well. So we'll pull up the FTSE, the CAC as well as the DAX to see if there's any sort of a relief that's coming from that end. So up in the green, almost 1% for FTSE 100, CAC up about 1/3%, and so is the case with the DAX, Dow Jones Futures. They too are trading in the green, 1/10% there, nothing much. Let's take a look at the turnover and how the volumes are shaping up at this juncture. Remember, yesterday was the futures and options expiry for Bank Nifty, so options expiry for Bank Nifty, so you would have seen that larger number of 16 lakh crores. Right now, it's just about 4.5 lakh crores on the F&O side. NSE cash, though, subpar, 20,000 odd. So it looks like a weak day of trade in terms of the volumes, at least, and the turnover. Let's talk a little bit more about the Fab 4 stocks of the day then, and what has made it to the list of Somit Sarkar this afternoon. Somit, good afternoon.
Good afternoon. So first one is on Praj Industries. Now the company added compressed biogas technology to its portfolio. Now this product is said to have uses not only in the transportation sector where it can be used as a replacement for CNG, but it can also be used as a feedstock in other industries, and that's the reason the stock is up nearly 12%. The second stock on my radar is KRBL, where Delhi High Court has ruled the infamous ED's action of blocking the money of Saudi investors as illegal and without authority, and post that the stock has run up nearly 11%. Third on the list is Himachal Futuristic, where the stock is up nearly 7% after the company said that they've won a 500 crore optical fiber order for BharatNet 2 project. Now remember, this is after the company had announced a capital expansion plans. Last on the list is Navkar Corp, where the stock is up nearly 5%, snapping its 7-day falling streak on the back of high volumes.
Got that. Samit, thanks very much for that update. That's the Fab 4 stocks this afternoon. Deepak Shenoy of Capital Mind is joining us on the show right now. Deepak, good afternoon to you. What is it that you are advising clients at this point?
So, good afternoon. There's been the market has been benign. There's not much happening. It's a good time actually to look at long-term portfolios. Looking through results as they come in, I think the financial results have been actually quite good, other than those little one-offs that we've seen with ILFS exposure being provisioned. Otherwise, I think financials are done a lot better than we thought. Great amount of treasury gains on financials, so I'd watch out for public sector banks in terms of results here. Also, I feel as we go along that interest rates are likely to come down or reduce from where they are currently, and so we have to position ourselves towards an interest rate cut cycle towards the next 2 years or 3 years. So that is where I think some of the entities that have deleveraged in the last few years will actually benefit. We're looking actively at them, whether they are in the manufacturing or industrial sector, or some in the NBFC and financial space as well.
What about the IT space, Deepak? TCS reporting numbers falling short of the margins. Expectations from Infy are the same, that they will probably disappoint on the margins, because the underlying factors, if you were to keep in mind the cross-currency headwinds, they still, and the volatility thereabouts, still seem to be the common thread between the both of them.
Well, I think the market's probably underestimating the scale at which TCS has performed. We're seeing extremely good traction within the results itself. I can't comment on Infy for multiple other reasons, but on TCS, the results itself show 26% EPS growth. Now, EPS growth is even higher than profit growth because they've done buybacks. They're going to continue to do buybacks. So the EPS growth will get a 2% to 3% bump up every year, considering they continue to do buybacks on an annual basis. We definitely feel here that if the IT pack shows us great results. Remember, Tata Elxsi was a little subdued in comparison. So if the large cap IT services pack gives us a good indication, we might evaluate some more, look at some more positions here. We're looking mostly at the engineering outsourcing companies like Elxsi, like a couple of others there, where we feel there continues to be long-term growth. I think the TCS margin not being met is, it's still a pretty reasonable margin for the kind of PE it trades at, and the results have been good. So I don't think this is cause for concern on IT. Though I wouldn't be overweighted right now. I think having a reasonable position in your portfolio, whether it is large or mid-cap IT at this point, is called for.
Okay. Deepak, the CV space has been badgered out of shape. CV companies, CV financiers, CV suppliers, all of them. I saw about a month and a half ago, you wrote a very interesting piece on one of the CV suppliers, this is Jamna Auto. What's the thought right now for a stock which almost everybody believed will have great growth and levels of 80, 85 seem sacrosanct? It's now languishing at about 60, 61.
62 or so right now. As a disclosure, we've recommended it to our customers. I have an interest in it. So we've looked at the results. I think some of the reports that came out were a little surprised by the September results. Now, Jamna typically has high receivables through the year and then factors out those receivables towards the end of the year so that it reduces their overall debt levels. This happens typically in the second half of the year. If you look at every September, receivables tend to be high. So I'm not really worried about receivables or the debt levels looking high. They do some CP as well. Commercial paper, they have about 180 crores or so at this point outstanding. This is common for Jamna Auto. It's not, so some of this has probably been looked at by the September results versus the March results. And they said, oh, increase in debt, increase in receivables. I don't think that's a big problem. There is a slowdown in the CV space. Some of it is attributable perhaps to the increase in axle loads, which started off in July and August this year. So they will go 3 or 4 month hiatus before that capacity, which is about 30% extra, that will hit into CV demand. Now also we're seeing BS6 looking at April 2020 for BS6, which will increase cost of most CVs. We believe towards the later part of this year, there will be a revival of a buying cycle. But if you look at Jamna or look at any of the CV players, the real deal is to think about 10 years from now. We're getting a lot more roads, we're getting a lot more connectivity, we're getting ports, we're getting even trains, dedicated freight corridors. Who's going to take the trucks to the trains or the ships or even transport them on the roads that we have been building? That's going to be a significantly higher demand for trucks, relatively under-trucked compared to most even developing economies. So I feel the demand for trucks will be quite substantial. Jamna makes leaf springs, so the replacement market is also available. So where they haven't yet actually done a whole lot, but they will also want to get into that, and they've specified that as one of their growth paths going ahead. And also they will be doing some capex in the axle area as well. So that will probably provide an extra kicker in the next few years. But if you look at the longer term cycle here, do we need more CVs? And even if CV is connected to electric, will they continue to need leaf spring based suspensions? I think the answer is mostly yes. Regardless of the technology, electric or internal combustion, we will need those. And demand with Jamna being about 75 or 72 to 75% of the CV market, they provide to everybody from M&M to Tata to Ashok Leyland to Volvo. They've actually been a significant provider to most of the space, so their fortunes are linked to the space itself. So if you look at it as a proxy for the CV industry, then the CV industry itself should grow well over the next 10 years. The current thing is a small blip, I think. If you look at it from a long-term perspective, then I would still be a buyer because, being a near monopoly player in a segment that's going to grow substantially in 10 years, that's a place I'd like to be in.
So what's the thesis here? Do you reckon that the earnings growth will be robust, or do you think that the P multiple will re-rate again after falling to what? Currently about 13 times.
Yeah, well, a little bit, yeah, probably forward is 13 times, but overall, you know, for a PE or for a company that used to trade at a PE of 25 plus, which was, I think, attributable to the relatively low levels of debt, I think just taking earnings growth at 20%, you will get this company at a much lower price or PE in a couple of years as growth sets in. There's also very efficient capital usage, so they do have good ROCE above 30%. So ROE is above 30%. So I think that is also going to propel that stock going further. And also, if there is, you know, a change in the debt cycle, because right now the debt markets have been, pummeled by whatever's happened with the IL&FS crisis, and I'm sure, you know, they have had issues in trying to refactor or they factor their receivables. But hopefully by the end of the year, much of that should ease. So I think any troubles in that space are temporary, but you know, you'll have to give this time. It's not going to be like, you know, you buy today and in 5 days it's going to be up 10%. This has fallen 40% from the highs. It's going to take its own time to go back. But you have to think of it only as a long-term story, not as a punt or a short-term play.
Okay. Just a quick thought, since we're talking about companies related to financing CVs as well, a small portion for IndusInd, of course, but you know, just drawing that attention back to that large drop that we're seeing in IndusInd Bank the last few days. Rahul Randeria, I want to come in on this one.
Yeah, Neeraj, if you look at the daily charts from October 2018, the stock has been moving in a broad band of 1470 on the downside and 1670 on the upside. After result, we have seen, you know, stock moved up, and on the immediately second day it started drifting lower. So definitely I would wait for some more time, more downside. Maybe the ideal level to enter would be around 1480, 1470. As I said, that it is in a band. So buy on dips and sell on rallies would be the strategy. I would wait for some more downside from here, from current levels, but definitely I would be a buyer at the lower levels in the range of 1470 to 1480.
Okay. Let's take a look at what dealing rooms are recommending in the session today. Stay on, our guest. We'll talk more with you, but let's get in Darshan and Yatin to talk about what their channel checks are telling them. Good afternoon, both of you. Darshan, let's start off with you first.
Good afternoon, Neeraj. One of the stocks that's been spoken about is Manappuram Finance. Gold finance companies are doing well. It's doing well in today's trade, but today also, if you're looking at it, Muthoot Finance is up at record highs. So there seems to be traction in which some of the HNIs are actively accumulating, both Muthoot Finance and Manappuram Finance. So that's one pocket. Again, momentum play, CSC is something that dealers are indicating that a lot of buying is happening based on the momentum and the news flow that's coming in on CSC. So that's been spoken about. And CET is something which dealers indicate that this time around they expect a weak set of numbers. Some of the HNIs have taken short positions at higher levels, and that's something that's been spoken about. Yatin, what do you have?
Well, IT as a pack is doing well. You know, ex-TCS, if you look at Infosys, was down, 1.5% in the morning, and right now 0.5% up for that one. Not only that, a lot of these mid-cap IT names are doing well. And on the basis of FNO trends, dealers are recommending buying select IT stocks, including that of Infosys. ITC also is another stock on the back of domestic fund buying. Dealers are indicating that the stock could cross levels of 300 in the short term. And finally, Aarti Drugs in the cash segment is where HNIs have been, buyers in trade. 2.5% up for that one. Of course, the volumes are not have not that been great, but still, this is one stock wherein HNI is expecting some bit of upside to happen.
Right, Yatin. Thanks a lot for that. That's a quick check on dealing rooms this afternoon and what's happening thereabouts. Rahul, ITC, would you see some interest in this stock? I mean, you don't get big bang moves here, but today's session, nonetheless, it's up 2%, approaching 300.
Yeah, recently, in the last 4 trading sessions, we have seen stock rallied from the levels of 280 to 295. Even my target was around 297. But if you look at the overall chart on the larger degree time frame, quarterly charts or yearly charts, the stock is clearly making a bottom. It has broken out from the triangular formation. This is a stock where one should have in a portfolio for investment perspective. Currently, from current levels, if anybody wants to buy for long-term investment also, it is an ideal level to enter. One should accumulate from the current levels, maybe 295 and 288 or 285. This is the 10 rupee range where one can accumulate for the long term. maybe in a couple of months, maybe 2-3 months, we could see stock testing the levels of 322, and after that breakouts happens, and I feel that stock has potential to test the level of a lifetime high, which is 367. So definitely from current levels, any dip should be used as a buying opportunity, strictly for investment perspective, because for trading, stock takes very long period of time, for finding the trend. But definitely from current levels, any dip should be used as a buying opportunity for long-term investment.
Okay, that's IGC for you. Just before I go and take closing strategies, we just discussed Infosys being a buy today, sell tomorrow idea. That's what Yatin highlighted. The stock ahead of its results has moved up quite sharply. In fact, from its lows, it's now up 0.6%. So it was down on more than 1%, and now it's closing in on the highest point of the day. Nonetheless, this time around, dollar revenues seen up 1.3% for Infosys at $2,958 million versus $2,921 million. Rupee revenues expected to grow by about 3.2%. But we're going to watch out closely for what happens to those margins, because expectations are, like TCS, even Infosys may falter on its margins. 684. Would you say that this could be a buy today, sell tomorrow idea, Brijesh?
See, Devina, on a shorter term time frame, say hourly chart, the oscillator has made a triple bottom formation. Even the trendline breakout had been witnesses. Right now, 683 or 684, the stock has been quoting. Definitely, one can take a BTST sort of thing with the stop loss of 673 or say 675 as a stop loss. And on the higher side, I'm looking stock touching a level of 695 to 696 zone where the resistance lies. If we are able to cross that resistance firmly for say another 15-20 minutes, if it trades above that, then definitely stock is heading for 710 to 715 zone.
Let's get in the closing strategies going. Rahul, your call first.
Yeah, looking at the highly volatile nature of the market, I have two defensive buy call. Both are positional call. From last couple of days, we have seen South Indian Bank showing some sort of positive divergence from the lower levels. So definitely, positionally, one can buy at current levels, which is in the range of 15 rupees, 0.70 paisa to downside 15 rupees. One should accumulate. Upside target is 18 rupees. One should place a stop loss below 14 rupees. Second stock is Adani Enterprise. Stock has been consolidating. A small expanding triangle has been happening on the hourly charts. So definitely one can buy from the current levels, which is 151, and on corrections to 148. Upside target is 162, and one should place a strict stop loss below 144.
Okay, Brijesh, have we already taken? I mean, maybe your top closing strategy, Brijesh, very quickly.
Yeah, see, I'll go with National Aluminium as a BTST as well as for a short-term trading bet. Right now, 63.40 the stock has been quoting. If someone wants to play for a BTST, 62 would be the stop loss. Positional stop loss would be 60. Target on the higher side for a BTST is 65. Positional bet, it would be somewhere around 68 to 70. Time frame to hold is would be somewhere around 2 to 4 trading session. And as a IT is been leading by the Infosys. KPIT is looking good on the chart. Right now 210 the stock has been quoting. Present rate or somewhere at 207 one can look out to buy this counter with the stop loss of 204. Therefore the target of 220 222 zone.
Okay, before we take in final thoughts from Deepak Shenoy, Agam Vakil is standing by. Agam, a quick perspective about what to expect from Infosys.
Right,
just 7 minutes to trade left, Agam.
Absolutely. Well, very quickly, I'm going to go through the numbers and expectations. We're expecting an uptick of around 1.3% in dollar terms, about a 3.2% uptick when it comes to rupee revenues. EBITDA margins could see about a 20 basis points of contraction to around 23.5%. Profitability likely to rise 0.6% sequentially at a little over 4,100 crores. Three key things we're going to be watching out for. First of all is a continuation of the strength that we've seen in your earlier quarters with respect to BFSI as well as North American revenues. But we must remember that TCS for this particular quarter has paid higher subcontract costs. Of course, higher compensation is something that played out for Infosys in the second quarter. Can that be a repeat? That's another question. That's another thing that we're watching out for. And finally, of course, details on the buyback and special dividends, considering they have earmarked about $1.6 billion. So those are the three things that I will be watching out for even as Infosys announces its earnings later on.
Thanks a lot for that, Agam. Deepak Shenoy, before we wrap up this conversation, one more perspective. I was just looking at the stocks which are doing really well in the session today. So there is Everready up 13% on the deal news, Kaplan Point 9%, Praj Industries 9%. But the one that's also moving really well today is KRBL 324 or 325. You would have seen that news that came in the Economic Times, of course. But what do you make of that? And is there a relevant impact for somebody who is wanting to make an investment into KRBL or is already invested in KRBL?
So, Neeraj, first as a disclosure, I own some shares personally, very small amount, but still. But here's the interesting thing. What happened in February 2018 was Monish Pabrai through the Pabrai Fund bought about I think 65 lakh odd shares, or a little bit less than 65 lakh shares of KRBL. And then this transaction was cancelled because the seller, which is Omar Ali Balsharaf, was allegedly in some kind of money laundering situation in the Augusta Westland case, where there was apparently a bribe given through this Omar Ali Balsharaf to through Gautam Khaitan, who was on the board of KRBL in 2010, and then given to apparently somehow this Tyagi bribe was given at that time. So the ED then blocked this transaction. Apparently then the money was returned to Mr. Pabrai's fund, but the shares were kept in abeyance. People thought KRBL is at fault for money laundering. Really, it was an allegation made on this person named Balsharaf, who owns these shares since 2003. He's their partner in, I think, the Saudi Arabia for distribution of KRBL rice, and one of their older partners. They've been with them for a very long time. And there is some KRBL connection in the sense that there is a common director between KRBL's Dubai company and this company called RAKGT, which is a company that was supposed to be involved in this bribe, Augusta Westland bribe thing. The court has said, listen, all that is fine. We don't know about all that, but you, haven't established why these shares should be blocked, or why the money should have been blocked and the transaction cancelled in the first place. What it really highlights is this is not really about the business of KRBL. It's not about indicting KRBL for a business practice that involves money laundering or anything like that. It really is about one of the players that has been alleged to have been participated in money laundering, whose shares they wanted to block because they didn't want him to take the money out of the country. It has nothing to do with KRBL's business. And to about 80 or 90%, I don't think the KRBL management has been indicted in any way in this case. So if you take that away, the share fell about half of what it was, because a lot of players sold thinking there was something really shady in this company. But given the financials, the fact that it's at a PE of 14, it's one of India's largest rice basmati exporters. It has a significant price premium abroad compared to some of the other brands, even those listed like Daawat. India Gate, commands a premium. It's a very well-known brand. It is also relatively less affected by the Iran sanctions. Iran is a smaller part of their portfolio. So the company is sound. There is, there is potentially a recovery that can happen as growth comes. Right. Growth is the only fear here, because we haven't seen that come about in the last few years.
Okay. Deepak, afraid we'll have to leave it at that. Just a minute and a half left for the markets to shut, but appreciate your time and your thoughts on such topics. Thanks much for joining in today. Okay, less than a minute left for the markets to shut shop. Quickly take you through what's happening. Devin, I'll take you through the mid caps, but the large cap indices about 1/3%, and I believe the mid cap and the small cap indices too, nearly about 1/3% or 0.5%, actually 1/3% exactly. So quickly take you through the individual movers and shakers in the session today. On the Nifty 50, firstly, gains for ITC, UPL about 1%, Wipro about 1%, IOC, Hindalco, ONGC are amongst the gainers. There's some strength in Tech Mahindra and Infosys despite TCS not looking all that great. So IT's had a mixed bag today. IndusInd Bank, though, the top loser. Tata Motors, the top loser. The Bharti Twins have looked wobbly. Bharti Infra has corrected yet again. TCS, the newsmaker. Yes Bank, a couple of percentage points lower. And stocks like L&T and Tata Steel too have looked slightly wobbly in the session today. But what about the mid-caps, David?
Well, the mid-caps and the small caps this afternoon did see a slight bit of a pullback towards the end of the trading session, but nonetheless, you are seeing some pain building about there as well. So, talking about a few other stocks from there that have made a dip in today's session, Interglobe Aviation being one. The stock is down about 3.5% by the close today. Infrastructure, real estate as a pocket has looked weak this entire day. So, you've got the likes of Asoba Developers, HCC, HDIL, even a Godrej Properties for that matter has given up in today's session. Allahabad Bank, Just Dial are the other two names that look weak in the mid-cap space. Amongst the gainers then, you've got stocks like a KRBL. We just spoke about that in detail. That stock is up in double digits. Everready on the promoter stake sale, that stock's moved up too. Kaplan Point, then you've got Jet Airways, which is moving up on the interest of the Tata Group. Praj Industries, the stock is one of the top gainers in the mid-cap index. Linde India as well, the stock has gained ground by closer to about 6%. 790 is where it's trading at. Bakrangi getting a clean sheet. The stock has been on a tear in the last 2 to 3 trading sessions, upper circuit for that one. JM Financial, ABB and Chambal Fertilizers are the other few stocks that have made a good comeback in intraday trade today. So while the indices for themselves have ended the day in the red by about 1/3%, it is not the lowest point of the day, and that still gives you a positive close for the week.
Yeah, and in fact, let's get the weekly numbers first, maybe, Devina, before we talk about maybe, because we've already dissected what the
day has done.
Yeah, the day has done, what the advanced decline, etc. look like. This is the weekly performance. Crude gaining, and clearly it showed on what HPBP did. Bharti Infratel hasn't had the best of weeks as well. It actually gained a little bit in the first couple of days before falling the last 3 days, and which is why it's not looking as bad. But from 297, it's come down to maybe 280 or thereabouts. And some weakness for companies like Yes Bank, so 3.5% lower for this one too.
Well, making a good move, at least from a weekly perspective, you've got Infosys and Tech Mahindra from the IT space. Tata Motors buzzing on the back of those cuts, job cuts in the UK for JLR. So some cost consolidation, stocks doing well. Then you had an ICICI Bank which made new highs during the week, so that too doing well. But Axis Bank, 7.5%, not an absolutely great week for that one.
A smashing week. Bring up the mid caps and the small caps, or maybe the NSE 500, as the case may be. Okay, the mid cap index, and there Bakrangi getting that clean chit, up about 15%. We were talking about gold finance companies today, dealing rooms. Muthoot Finance has done rather well for itself, 7% higher. Escorts about 4%. Torrent Pharma new highs, up about 4%. And yeah, Manappuram and Muthoot. So Manappuram too, up about 3.5%. Not a bad week.
Emphasis struggling a bit, so you've got the counter. You know, its buyback was at 1200. The stock is sub 900 now, so that is a bit disappointing. Dilip Buildcon is down 5% You've got Bank of India down closer to about 6% and a horrible week for Group Finance post the announcement of the deal with Bandhan. That stock's given up 24%.
Yeah, not surprising. The small caps, do we have them as well? Maybe just a quick glance at what the small cap index has done too, and just see some names out there. Fertilizer companies like Chambal doing okay. Repco maybe gaining because there are very few home finance companies available which are non-PSUs and dependable. Jet Airways gaining a bit, I think in part courtesy to today's move. A big spike to 55 to 56, and maybe as a result of that, that one's done well. Devina, this one continues to grind lower.
Shankara Building Products, yeah, no respite for that one. Even for that matter, it's been the case since almost more than a month now for the stock to be languishing the way it is. Persistent System down about 5% Rain Industries and Lux Industries too down 15%. So be it a Page, be it a Lux, or or Rupa Limited for that matter, and none of these names are doing all that well so far, at least.
Yeah, looking weak. Let's see what happens. But how does all of this set us up for next week? Brijesh, to you first. What do you think the next week brings for the index?
See, Neeraj, as I've said, 10,885 to 10,900. I'm looking for Nifty. That would be acting as a resistance. Whereas on the downside, 10,700 followed by 10,640 are the support zone. So nothing surprising on a higher side, because these stocks on a shorter term time frame, or say even on a daily chart, they are moving up on a price pattern. But whereas on the oscillator front, they are the oscillators are making lower highs, which is giving the negative sign. Even for the Bank Nifty, which I was been looking, 27,750, 27,800 would be acting as a resistance. But on an immediate basis, the support lies at 27,200 to 27,250. If we break, then 26,900 would be acting as a support. So nothing on our indices act, but individual stock might be outperforming it.
Okay, Rahul, what about you?
Yeah, Neeraj, looking at today's close and weekly close, if we look at the weekly charts in Nifty, it has been an inside week candle. It was an indecisive candle for whole week. So definitely looking at the current setup on the daily chart also, I feel that some sort of pressure could be seen on Monday. But at current point of time, if Monday we see 30-40 points of gap up, one should try to go and short at the higher levels. Larger trajectory trend seems to be positive, but for a couple of days we feel that pressure could be seen. On Bank Nifty front, again it was a high wave candle on the weekly charts. So definitely again Bank Nifty could again come and test the levels of 27,163, which is current week's low. So definitely on Monday I would be looking out to sell at the higher levels.
Okay, got that. Thanks very much, Rahul, and appreciate your time, Brijesh, our technical experts there with their views. Well, with that, it's a wrap on this edition of Countdown. We should be getting Infosys numbers anytime, so stay tuned for that.